evening. This is the market update for buy sell short for Thursday, November 15th, and another red boring day has passed as we await the fiscal cliff that the idiots in Washington continue to drive us towards, and that coupled with tax law selling has sent the majority of us to the sidelines where it's actually nice and safe. We're starting off with the 15-minute chart, and as you can see, pretty much the same thing we've seen over the last couple of weeks. Downtrend, consolidation, downtrend, consolidation, downtrend. What's happening is the consolidations are getting shorter, the downtrends are getting tighter, and yet again we saw another big drop. We were down 60 going into the close, and then we had a very nice short cover bounce before the sellers hit right at the bell. Now the reason for that is finally they are going to meet tomorrow at the White House to discuss some sort of possible resolution to the fiscal cliff. Now this has come amid the back and forth action we've seen over the last couple of days, with Boehner saying we're not going to raise taxes for the rich, screw the middle class, and Obama coming out and saying screw the rich, we are going to give taxes to the middle class. And that is where we stand, and we find ourselves in the middle of uncertainty, and the market dislikes that. Trades have been terrible. We not only have large caps and profitable stocks that have done well this year, getting taken to the woodshed over the fears of paying a couple of extra percent in income taxes. We also have tax law selling, hitting stocks that are down on the year. So there's really no safe place in this market right now. Now, tomorrow we do have that fiscal meeting, and we saw a nice little cover bounce in the last 30 minutes of the session. I would not be surprised to see us have the market up tomorrow. And you know, we could be up 200 plus points if they spin it the right way. I mean, just like we saw last year during the debt ceiling fiasco, we'll probably see the same sort of thing. We've been in a down move all week long, really. So any sort of hint tomorrow, I mean, they did the same thing last Friday. There was hints of a possible deal. Market rallied up. Then we had the press conferences and reality hit, and down we went. We'll probably see a similar thing happen tomorrow. Looking at the daily chart on the Dow, actually, bearish is the only word I would describe it. We broke down through a bullish falling wedge 2 days ago. That is a pretty rare occurrence. That is something you do not see too often, especially in the Dow. We sliced through the 38% Fibonacci retracement, and we find ourselves right at that 50% level. What is Fibonacci? Look it up. No, joking. It's essentially a tool we use to mark potential bounce points in the market, as based on an Italian mathematician's numberings from quite a long time ago. But anyway, needless to say, this market is oversold. But as we learned throughout the debt crisis of last year, oversold can become very oversold, can become woefully oversold, can become crazy oversold. We're just oversold right now. So, I mean, there could be some more downside, especially if we get no deal. Now, right after the close, we had Simpson Bowles. If you don't know who those guys are, they were on the debt negotiation committee. They came out and said, you know, it's possible they might drive us over this fiscal cliff over the next month. Scary thing to think about, to be honest. I think these idiots, though, will make a deal, and, you know, but until they do, we're sort of at their mercy for all intents and purposes. Some of the other indices, Russell, 2K, small caps, broke down through a bullish falling wedge. You know, we're approaching year lows here. Oversold, of course we are. Kind of a positive outlook. Oil trying to bottom here, but the reasons for oil trying to bottom actually could be bearish for the market, because we've got Rumblings over in the Middle East, big surprise there. But, we've got Israel pounding the crap out of Hamas and troops lining up on the border. We've also got an Israeli election coming up and chatter that, those in power need a war with Iran in order to get reelected. And people hinting that, Iran probably wants a war too so they can get their embargo to end. Just a whole lot of stuff floating around out there, and the market hates uncertainty, and we are in a very uncertain time right now. McClellan Oscillator. You recall I went over this on the last video. Getting down to the juicy zone. Let's see us get this down here. Minus 100, minus 120 would be delightful. Typically, if you go back and look at these previous deep sell-offs on the McClellan Oscillator, usually takes or happens about a week or so before we see a really nice rebound in the market. So pay close attention to this. We do have Thanksgiving next week. If there's any sort of hint that these idiots can make a deal on the fiscal cliff, we are off to the races, in my opinion. I am still, as I said, mega bullish on this market, but we need to get through this period right now. We've got a boatload of Fed money getting pumped into the market daily. We've got economic indicators picking up. Today's data was bad because of the hurricane that hit 2 weeks ago. Totally expected, but I think once we get through this latest fiscal cliff nonsense, we are off to the races. Now, one thing we're seeing a lot of right now in the market is stocks getting taken to the woodshed. Looking at the comp, we don't really go over this much, but this is the chart of the NASDAQ. Brutal since September. But you know what? Let's take a look at a chart. Check out Apple. Holy crap, it's like looking at Apple's chart. The NASDAQ mirrors what we've seen at Apple. Not really a surprise because it's the majority holding in that index, and where Apple goes, the market goes, and Apple continues to fall into the toilet, and it is deeply oversold. Volume has accelerated here over the last month. This is the stock we're going to continue to watch for a possible signal that the market has turned. The 20-day exponential is right now at 576 on Apple. Apple has not touched its 20-day in a month. So it going extended periods, not touching that moving average is not out of the question, but being so far away from it is, and being very oversold is also pretty unusual for this stock. So we need to keep an eye on this stock. It'll give us an indication if any sort of rally we see in the market is real. 550.55 could be a signal that we're on that rounding bottom bounce starting up sort of thing. Now, this week has probably been my lightest trading week, I think. I don't think I've done so few trades. Actually, I have. The debt crisis last year was about probably the lowest number of trades I've done since back then. Really a crappy market, and it's been typified by the garbage we are seeing move right now. I mean, check this out. RCON. I mean, if we did call it in the chat room, ended up giving a quick 15-cent gain and ended up running another friggin' 70 cents. But this stock had earnings today. They had total revenues of $1.5 million and lost money. And the stock ran 100%. But, we've been seeing that kind of action over the last couple of days. Actually, that's not a Cali, is another one. These guys actually made money. China stock up massive. So, of course, they went after the other low-float China turds. CLNT up big. SGOC up big. This is this market. This is what we're stuck in right now. If you want to drink a 6-pack or a 12-pack, whatever it takes to get you buzzed and drunk, this is your market right now, because you cannot have any common sense chasing some of this stuff. It's a turd, whatever turd floats to the top the quickest kind of market. I don't like to call a lot of stocks in a market like that. I am perfectly content sitting back and waiting for this crap storm to end. Now, you recall a couple of days ago, I discussed OCLR. And OCLR, continued to prove, or I think is proving what we are doing. Our strategy right now is sitting on the sidelines as being correct. You recall I mentioned that saw this stock last week, looked like it was trying to bottom out, hadn't touched this 20-day exponential, ripe for a rebound. But then I said, we're going to have to hold off because we're seeing a lot of tax loss selling in a lot of stocks right now. It actually looks like it's getting pushed up a little bit earlier than we would normally see, partly driven by the fiscal crisis, fiscal cliff nonsense. And then look what has happened since then. Just free fall. I mean, this stock is down without any sort of meaningful bounce, almost like Apple, just right straight down. All-time lows. I mean, this is an all-time low for this stock right now. Another one that has done a similar thing, just to pull up a couple of stocks, DCTH. I mean, boom, straight down. This one actually tried to put in a tail bottom today. Actually could be worth watching. And OCLR may do something similar tomorrow, especially if we get a bounce back in the market. Look how woefully oversold it is. But the point I'm trying to make is we have to be very, very careful bottom buying stocks in this market. And I mean, today I kept having to walk away and play Call of Duty, which came out, which actually was beneficial. Telling the wife there, that's my bad trade avoidance strategy this week, is playing Call of Duty. But the reason being, I am chomping at the bit right now, looking at some of the sell-offs in these stocks and, thinking, you know what? I got a 3-month time frame on some of these stocks. I can buy, and sit on these stocks for 3 months and get my 25, 50, 75% returns. That's what I'm thinking right now. But I also am thinking, we got tax loss sellers hitting. If this fiscal thing, if they keep driving this bus towards the ledge, who knows how much worse it can get. So, I want to err on the side of caution, at least for now. If we were in the middle of December right now, looking at charts like this, I would be telling you guys, start to buy. But here we are, middle of November, a month early, so we sort of still have to hang back. We have next week, Thanksgiving week. Typically, it can be a bullish week for small caps. So, again, it's going to all depend on the news flow we have coming out of Washington. But, all I will say is the more these things sell off, the more bullish I will get and the more happier you should get about the next 3 to 6 months. Big sell-offs like this, especially when it's based on stupidity, like paying a couple of % more in taxes, the fiscal cliff nonsense. Once those things get pushed to the sideline, this is going to be a very, very nice market. I mean, look at the haircuts we are seeing across the board. When these start to bounce, and they will bounce, it is going to be very, very nice. So that's it for the video tonight. Stay patient, guys. This will turn, and when it turns, it's going to be very, very nice. And I'll see you guys in the chat room tomorrow. Good night.